I was paying all attention to the surge in temperature in Delhi. For me, that in a sense, when I read the number 52.9, I looked at the skies and I said, thank God in Bombay it's not 40 also.
But
Now,
came out to be not true.
whatever may be the reason.
Manageable here compared to what Delhi is facing.
Things are much manageable
Totally.
here. I mean, 50, it may not be 52 and a half or 52.9, but it certainly is nearing 50. And the country is going through a severe heat wave. And that is something which now you can actually feel the heat. The minute you think about it, I like, okay, let me just cool down the temperature by 1 degree at least in the air conditioner. So these are they're really
crazy times.
Crazy times, and weather change, weather pattern change, something which we always talk about. I think now it is on your face, and when it hits you, you realize that, oh my God, how things are changing. But you got to live with it. Nothing will change it. I guess the Met is predicting that this week and next couple of days are going to be even tougher for at least parts of North India. But back to markets, and I would give global cues a skip. Not that they are not relevant, but they are not crucial for next couple of days, purely looking at the positioning of the market. And the positioning of the market, I think, is all centered around one large event. Everyone has an opinion, everyone has a different kind of a risk profile, and I think the approach cannot be called as very universal per se. Let's look at all the components which are at play. Now that's the trader screen. You want to look at it and you would say that today we are in for a gap down start, which may well be the picture. So global cues are negative, net flows are negative, and FI positioning is negative. Now let's look at the lay of the land. FIs, barring one day, they've been selling. So the global view, at least ahead of the election, is that you want to exercise caution. Second, the rollovers are low, and I'm looking at historical low rollover on the last day of FNO expiry. And that clearly seems to be indicating that the average interest in the FNO market is not very exciting. Third, brokerages are bullish. That's very interesting. Brokerages have gone on record, whether it's IFL or whether it is India Info, whether it is IFL or whether it is GAM or Bernstein, all of them have gone on record and they have already started talking about a decisive BJP victory. But more interestingly for me is what the HNI crowd has done. And there is a subtle and there is a clear correction which has kicked in last 2 days in the so-called Modi stocks. So that's the positioning of the market. The market positioning is such that the levels may not be that damaging. We are not very far away from an all-time high. But in terms of participation, commitment, institutional activity, you can see that the market in a sense are not nervous, but they are actually anxious. Barring some of the Modi stocks or policy stocks, I guess the level of participation in the market is not that great.
In fact, Nikunj, you spoke about how rollovers have been on the lower side yesterday. On the FIS side too, very interesting data points. We just when we thought that FIS selling is over, we see a 5,000 over 5,000 crore selling in cash. Even on the net long to short side, they are 50-50 now. So it is becoming difficult for a trader to read these signs and trade, right?
See, it's difficult to trade the market purely based on one data. I think the basic strategy in this market is that each individual needs to define their risk profile and define their approach. If you bought the election trade, which is that you bought into policy stocks end of April, beginning of May, I would say that it's time to take some chips off the table. If you've invested in some of the capex stocks or defense stocks or railway stocks for next 3 to 5 years, trust me, nothing will change, barring volatility, which you should be prepared for. If your time horizon is 6 months plus, I guess the economy is in a good is in an uptrend. Election cycle may have an impact in the near term, but eventually it's the economy and the earnings which would really matter, and that on that account, I think there are bargains in the market. Similarly, if you're hand on a hard trader, and if you're sitting on some cash, I think it's time to buy some protection or raise some cash. So that's just like one shoe does not fit all. You cannot look at a perfect strategy. It really has to be a function of your risk, your expected returns, and how much volatility can you digest. But if you would have asked me last Friday, I would have said that the market positioning was looking slightly extended. But in last 2 or 3 days, especially this week, things are not simmering the way they were. FIs are stash short. HNI investors, they've started booking profits. Modi stocks or the policy stocks have seen a mild profit booking, and there is no large built up in the F&O market. So net the market positioning is neutral to anxious rather than bullish and excited.
But then does that set us for a bull run after the verdict? Because I know Street is pricing in the return of BJP plus NDA, but let's say if the number is even slightly better. Earlier the narrative was that everything is priced in, there is no room, but perhaps this correction will set that mood then that there could be a rally.
See, the way I look at it is that whether there is continuity or not. So it's like a binary outcome which markets would focus on. Now whether it is 310 or 320 or 350. In democracy, what really matters is that as long as you have a comfortable majority, then you will extend with all the policy reforms. Now, optically, you can argue and say, okay, 310 is better than 320, 320 is certainly lower than 330. So, all that narrative actually is just meaningless narrative purely from a market standpoint.
In fact,